Welcome. Hi, this is Christine Crowell here, and thank you for coming to today's video. And today I really want to talk about how silver for May is going to really, I believe, is going to change. And for you silver stackers, as well as those of you that are collecting gold as well, gold stackers as well. So the bullion banks are running to the hills, literally, as monetary system is falling apart. Now, stackers, let's look at this, okay? So today we're going to be diving into something that is very, very special, that only a few people are aware of and talking about. So whilst everyone is panicking about the stock markets crashing, barely anyone really mentioning what's happening with gold and silver. Have you noticed this in the press? Have you noticed, are they talking about gold and silver? What's happening with gold and silver? We're hearing everything else apart from what is happening here with gold and silver. So gold and silver, they're raising to an amazing strength, but they're doing this quietly, daily. But sometimes they're getting knocked down, but they get back up again. And when I say knocked down, just by a few percentages, for example, not like how the crash in the stock market is, for example. And yet they keep rising, they keep standing the test of time. And that's the sign for you to really see that even when they're strong and under pressure, they still stand strong, for example. So what I'm going to be talking about today is I'm going to be talking about what no one is really talking about. So turn on any financial news network. You'll see it's all about stocks, inflation, rate hikes, for example, crashes. But where is the coverage to do with precious metals? There needs to be a news channel for that on, the financial network news stations, for example. So gold and silver are behaving exactly how smart investors expect in times like these. They're resisting collapse. For example, they are holding their value and giving us repeated opportunities to stack. So silver in particular, for me, I just feel it's screaming to be noticed. But not many people are talking about this. So let's look at this. The gold to silver ratio just hit 100 to 1 again. It briefly went to 104, and it's sitting there like a warning flare. Literally, it's in your face. So the ratio means that it takes over 100 ounces of silver to buy 1 ounce of gold. Wow. That's historically out of balance, right? So let's look at this. So about 150 years ago, silver only touched the ratio a handful of times. This only happened a handful of times, literally. And each time it signaled a big shift. So silver has been, it's been lagged, and it's lagging behind gold. But that's the setup. The lag is how we can win as stackers. We need that right now. This is a classic risk reward. Silver offers much more upside potential than downside right now. The risk is small, but the reward is potentially massive. So like I said, the silver coin, $35 for example. So let's look at this depleting stock that we keep, well, some of us keep hearing about. Lima drainage as well. And let's talk about this. So silver investors, the Lima silver is the inventory, it is draining. So COMEX is showing weekly outflows, physical supply is tight. They are taking like 8 weeks to deliver gold and silver directly. But there seems to be a secret party that is ordering all of this gold and silver, for example. We've got the central banks, we've got the reserves, for example, but there's another group of people or entities or organizations that are also ordering large sums. So silver stocks are at a major drawdown, for example. So week after week this is happening, and this isn't just noise, it is about the sound of demand outpacing supply. At some point the rubber band is going to just snap. I wish I had a rubber band right now just to give that metaphor. And let's look at this, what this setup looks like. So let's look at the mine. Now I've talked here about, in some of my videos, about the world's largest, wealthiest mines, for example. Now countries around the world are going literally to the mines directly to buy their silver, sludge, whatever they can get, grain, whatever, and they're delivering it back to their country and refining it. This is for a reason. Not going to be, why would they be going directly to mines to get this gold and silver, for example? So I talked about this before in my videos about mines around the world. Check out the links here, for example. The production, they're having issues with the production, for example, because the stocks are depleting. Globally, they're saying that the silver mines, for example, that they've only got like 20 years left. And this is because of the economics, but also energy cost, environmental controls, and politics. Silver is not just underpriced, it's underproduced. That combination is lethal long time, for example. So let me talk about the silver history and the Hunt brothers. Let's not forget that history gives us clues. Remember, I always talk about the pattern, history repeating itself. Now, you may not know about the Hunt brothers in 1980s, or maybe you do. They drove silver up to $50 per ounce by attempting to corner the market. That wasn't sustainable then, but it showed just how quickly silver can skyrocket when demand surges. So today, the conditions are different. So more grounded, for example, in real global demand and supply chains, for example, this chain pressure, we're seeing long-term wealth builders are entering silver now, not speculators, stackers like you, for example. Even the Silver Institute has reported that there's a growing gap between silver production and industrial and investment demand. So people are stacking. Like me and you, we're stacking, not just to hedge, but to build wealth. And not to, to be like the richest person, just to build wealth. So whether you purchase once a week, or every 2 weeks, or once a month, buy silver consistently. That's how you can build long-term wealth strategy, for example. For example, you can, purchase silver 1 month, $35, for example, and then gold another month. Split them up, for example. So let's talk about the opportunity here, for example. So the setup is that low price, high demand. There's media silence.